Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 16th, 2025, and we're diving into Prologis' second quarter earnings report for 2025. Prologis is a global leader in logistics real estate, operating in high-barrier, high-growth markets. Joining us today is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Prologis is a fascinating company, and their Q2 2025 earnings report provides a lot of insights into their operational and financial performance.
Revenue and profitability overview. Let's start with the top line. Prologis reported total revenues of $2.18 billion for the quarter, with rental revenues contributing $2.3 billion. John, how does this compare to their performance last year?
Prologis has shown a solid increase in total revenues, up from $2.01 billion in the same quarter last year. This growth is primarily driven by their rental revenue, which increased from $1.85 billion. Their net earnings attributable to common stockholders were $570 million, reflecting a strong operational performance.
And what about their core FFO?
The core funds from operations, FFO per share, was $1.46, up from $1.34 last year. This indicates a robust cash flow generation capability, which is crucial for a real estate company like Prologis.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $1.41 based on a survey of 7 analysts. How did Prologis perform against these expectations?
Prologis exceeded expectations with an adjusted EPS of $1.46, beating the forecast by 5 cents. This beat is a positive indicator of the company's financial health and operational efficiency.
What does this mean for investors?
Beating EPS forecasts generally boosts investor confidence, as it suggests that the company is managing its operations effectively and is on a solid growth trajectory.
Operational efficiencies and future outlook. Prologis has been focusing on operational efficiencies. Can you tell us more about their occupancy rates and development activities?
Absolutely. Prologis reported an average occupancy rate of 95.4%, which is quite impressive. They also achieved development stabilizations worth $1.18 billion, indicating their strong pipeline and execution capabilities. Looking ahead, they have provided guidance for core FFO between $575 and $580, and strategic capital revenue between $570 and $590 million.
How does this guidance reflect on their future prospects?
The guidance suggests a stable and optimistic outlook. Prologis is well-positioned to capitalize on the growing demand for logistics real estate, especially in high-barrier markets.
CEO-CFO statements and strategic initiatives. Did the company leadership provide any statements regarding their strategic initiatives or future plans?
Unfortunately, there were no specific statements from the CEO or CFO in this report. However, Prologis continues to focus on strategic capital, with $452 million in fees and promotes, and a market equity of $100 billion. Their gross assets under management stand at $205 billion, highlighting their scale and market influence.
What does this mean for their strategic direction?
Prologis is clearly committed to expanding its strategic capital business, which is a key growth driver. Their large asset base and market equity provide a strong foundation for future growth and investment opportunities.
Key takeaways. In summary, Prologis has delivered a strong performance in Q2 2025, with impressive revenue growth and an EPS beat. Their strategic initiatives and robust guidance indicate a positive outlook. Thank you for joining us, John.
Thank you for having me. Prologis is certainly a company to watch in the logistics real estate sector.
Thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Prologis' performance in the comments below.